Jeff Sica is here with me now. Jeff, so we got jobs, we got core inflation numbers. What are you looking at this week? What's the more important index?
Well, I think it's important, David, to think about what Jerome Powell said last week. What he said last week was he believed that inflation was not cooling as much as people think, and he cited the housing numbers. He said there was some resiliency in the housing numbers, but what it really is, it's the labor market. The labor market is extremely tight. We've seen a little bit of a tick down in past months, but what I think we're going to see on Friday is we're going to see the labor market tick up even higher than anticipated. I think we're going to see, when you have companies like UPS that just approved $49.50 an hour for their drivers, and then you have United Airlines who just approved a 40% raise over 3 years. The labor markets are tight, and you're going to see wages increase somewhat, and that's going to be a cause for concern.
And Jeff, it's not just so much what's happening here. China has a lot of problems right now. How do their problems affect us over here?
China is in a complete disaster right now. They have become a disaster. And what they have, everyone knows about their aging population. Everyone knows about their youth unemployment. But really what's going on in China, where all this chaos is coming from, is their commercial real estate market. S&P Global just downgraded 50 developers, Chinese developers, who are not making interest payments or defaulting on their loans. So anyone who doesn't think that China, who is now our third largest trading partner, they were once our first trading partner, Canada and Mexico are ahead of them. You have investment in China crashing to an all-time 20-year low. So they're in deep trouble, and because we're in a global economy, there will be a level of...
Well, talk about commercial real estate. We have big problems with commercial real estate. There's still in New York City and San Francisco, there's still office buildings that at best are 50% at occupancy.
Right.
So, and that affects banks, because a lot of banks put a lot of big investments in commercial real estate.
Right. I mean, the regional banks, S&P Global downgraded a lot of the regional banks last week. And the reason why they downgraded them is there's an ominous number out there, David, and that number is 1.5 trillion. That is the amount of refinances of loans that need to be done by 2025. 70 to 80% of those loans are sitting on the balance sheets of regional banks. And if they involve office, a lot of those loans are going to default or already in default, and that's going to hurt the economy.
A wary Jeff Sica. Jeff, great to see you again. Thank you very much for kicking it off.